is Lisa Calamone. Welcome to our webcast with Cooper Levenson attorneys Alexandra Rigdon and Cynthia Grob. Today we have Noel Capuano joining us. Noel is a certified public accountant of over 30 years in New Jersey at Friedman LLP. She specializes in business valuation in connection with marital dissolution, buying and selling agreements, business disputes, employee stock ownership plans, and estate and gift planning, and has been qualified as an expert witness in various courts in both New Jersey and Pennsylvania. Welcome, Noel. How are you?
Thanks so much. I'm doing well. How about you?
Great.
Thanks for throwing 30 years in there.
Hey.
Well, I've known you about that many.
Subject, you know?
Fun fact.
I'm going to pass the questions over to Lexi and Cynthia, and they'll get started.
Okay. All right. Hi, Noel. It's hard to even follow up with that. Those impressive credentials. So Cynthia and I have obviously used you personally in your firm services and cases, and you've been wonderful. And we often have clients who maybe they don't want to have their business evaluated, or maybe they are the spouse without the business, but they don't see the necessity of evaluation. And they'll say, well, why don't you just look at the tax returns? And I always say, well, I'm not necessarily going to be able to fully explain it, but the tax returns are not representative of somebody's income. Is that correct?
The answer is actually yes and no. The tax returns are absolutely a good starting point, and we are very aware on our end that the tax returns are usually one of the first documents that most people will look to. And so we're very conscious of that, and we will always try to sort of reconcile our final conclusions back to the tax returns to kind of explain why or why not the income is or is not very different than what's reported on the return. In the case of an employee, for an example, you may have instances where the person receives non-cash compensation in the form of stock options or restricted stock units, something like that, where there's a taxable event, but the person didn't actually receive cash. And so when we're talking about income that's actually available for support, the options or units, they often represent an asset that's going to be split in equitable distribution, but they may not be appropriately included in the determination of income available for support. In some instances, you'll have an employee that may receive that type of compensation every year. And so it's a regular occurrence where they're cashing out the units and they're actually living on that recurring stream of income. But then you also have instances where it's a very occasional type of thing. So you really have to evaluate every case on its own merits. But that's one issue in an employee. And then also when you have a business owner, the tax return can be even less representative. Because, like an example of a pass-through entity, like a partnership or an S corporation that they may own an interest in, they get taxed on their appropriate or proportionate share of the business's profit, but they may not have received the cash. So we need to look at what did they actually receive in the form of distributions, because that would be more representative of their cash flow. But by the same token, if there was any purposeful hold back on distributions, perhaps for divorce planning or whatever, there could be a lot of reasons. We need to take that into consideration as well. So there's a lot of different variables at play. And again, we're very conscious of the fact that, people will look to a tax return, and for better or worse, we need to be able to explain to them why those numbers are not necessarily the numbers that should be used for support.
Okay. And so when we're looking at things that our clients have or parts of the marital estate, how does a cash intensive business complicate the process of determining a person's income or an individual's income, which is available for support purposes? And if there is a cash intensive business, how do you handle that?
Cash intensive businesses, quite frankly, cause a lot of problems for a lot of reasons. First and foremost, we need to manage the client's expectations. So it's very common that we will have, and it's typically obviously the non-owner spouse will say, I know that there's tons of cash in the business. They always, my spouse always had cash on hand. They gave me cash every week. So, immediately we have client expectations that we need to manage. First of all, simply because there's cash doesn't necessarily mean it's unreported. So that's one issue.
Okay.
Secondly, it can be extremely costly to try to quantify the amount of cash that there is. So the existence of cash is one thing. How much there is quite another. So on the business valuation side, if we're actually valuing the business, the impact of whatever cash there may be is usually less than, because it's not a dollar for dollar impact on value. However, when we're talking about income available for support, it is a dollar for dollar impact. So a lot of times what sometimes we will do on the valuation side is we'll run different scenarios and we'll say, okay, well, if this amount of cash existed, this is what it does to the value. And that sometimes can help clients to kind of wrap their arms around the magnitude of the issue. But again, in terms of the income available for support, a lot of times what can be a very good tool would be a lifestyle or spending analysis. Because a lot of times what we can see when we look through personal bank statements, credit card statements, and that type of thing, if we see the absence of certain expenses that would be considered necessities, like groceries, gasoline, haircuts, things like that we haven't all gotten in 6 months. When we see an absence of those types of expenses, and we know that the business is the only source of income that could have been funding them, we may be able to conclude that there's at least that amount of cash. And then again, of course, how much they actually spent on those things, we're still kind of at the mercy of the client to say, well, I went to the grocery store every week and I spent $200 and it was all cash. Well, unless they're keeping receipts. Now, I've had cases where people purchased automobiles and literally had the receipt that showed cash. Again, you have to spread that out over a few years. You probably didn't do one job and get one payment of $50,000 that enables you to go out and buy a car. So there's lots of different factors at play. It definitely complicates things, but it is what it is, and a lifestyle can often be a good indicator of at least the existence, and then people are a little bit more willing to kind of come to the table and negotiate a little bit when that comes into play.
Right. Yeah, it's an important issue, and it's certainly something that the client expectation is certainly something that Lexi and I are regularly juggling, whether you have the spouse that is the recipient of the cash, or you have the non-earning spouse that is saying there's cash funds things. It often is. I see a lot of conflict for parties, and it's a complicating issue, and your firm and the involvement of CPAs in general is really helpful to us in making sure that we can manage our client expectations, but also address this issue for them in a real-time way.
I mean, I will say that, and I'm sure that, I'm a perfect example. I mean, I use my debit card for absolutely everything. Like I'm the embarrassing person that goes to the store and buys something for $2 and literally uses my debit card. So, there is a much increased over the years use of credit and debit cards. And so
makes it
I don't
easier
want
for
to
you
say,
guse, I guess.
Pardon me?
Makes it a little easier, I guess, right? You can actually track it.
There is. And again, when you're doing a lifestyle and spending analysis, excuse me, there are other things that we're taking into consideration too. If we see a ton of credit card debt, if we see an increase in home equity loan draws, things like that, it doesn't typically make logical sense that someone would be squirreling away cash, right? So operating their business on a cash basis, putting that cash aside, and then in turn going out and taking out a ton of debt. it just doesn't really make a lot of sense. So there are other things that kind of point us to, okay, is there a lot of cash really here? Or is it just simply that, the way that they operated their lifestyle was such that the business owner would take out $1,000 in cash. It was reported, but they just took the cash out, gave it to their spouse, and said, here's your money for the week. So it's really, there's a lot of factors to consider. And it's always, everyone's, their communication, the way that they maintain their accounts, all of those things kind of come into play. And a lot of times couples didn't really, and as you know, didn't really sit down and talk about it all that much. It just kind of morphs. This is just the way we always did things. How many times do you hear that?
Often.
Yeah.
Well,
Or I don't know, they handled this or they handled that, and there's
Yeah.
a dichotomy of who did what. So there's, in a divorce, there's a it causes a lot of distrust. So
Right.
I
And
agree.
they're so embarrassed to say, I can't believe I was married for 20 years and I never knew. And I'm always saying, don't be, you were married, you trusted your spouse.
Well, Noel and I had a case, which obviously I won't say the name, but it was like, I don't know, but there was always cash. I never had to worry. I never put anything on a credit card. I just paid in cash, and all of a sudden he doesn't have any money. So, you probably know the one. I mean, so thank you so much for your thoughts, Noel.
No problem.
We really, really appreciate you coming on.
Yeah.
Anytime. My pleasure.
Yes. You and your firm, you're an awesome resource.
Yes. Yes.
Good to know.
We like to end these little webcasts with just a fun question. So I'm going to ask you, what are you currently binging?
Binge watching.
Yes.
Right.
So
Not
Not
eating.
binge drinking, not binge eating, not binge spending.
Whatever your vice is.
I am actually becoming quite the expert on Vikings. So I am on my second. My husband and I started with a show at the recommendation of one of his colleagues called The Last Kingdom. And we finished, I believe there were 4 seasons of that. And then I just happened to stumble upon another show called Vikings. And we are, I believe, in season 4 of that now. So we watch maybe 2 or 3 episodes a night. It's just, I find it fascinating. I love all that type of thing, but just it's incredible to me how brutal that time was. And last night they actually wound up executing one of the characters, and I could barely watch.
Yeah, you're not going to divorce her, you're going to take off her head.
Yeah.
Right. So that's my, I guess, guilty pleasure at the time being.
Well, I just finished Dead to Me on Netflix, which I might be a little behind the 8 ball because that came out a while ago, but it was really campy and entertaining and unrealistic, but it was really, really fun. And right now, I'm actually watching something really fascinating on Amazon Prime about Ted Bundy and his victims, but also the people that knew him personally, like someone he dated for many years. So I know a lot of people are into true crime. I'm one of them. So I guess Noel likes beheadings, and I like I like serial killers. This is
Here we go.
Something. Bring us out of the gutter, Cynthia.
I like to binge. So I have just started food and wine. And I just started watching Taste the Nation by Padma Lakshmi. And it's really interesting. So the episode I just watched was at the US border, and it was in El Paso, and and their accompanying city. And it was really an interesting, it's both interesting to see the human perspective of food, but it was also, mouth watering because, as I have mentioned on previous episodes, Mexican food is my favorite food. So she came out strong for me in talking about burritos and tacos, which are my favorite food.
We are currently binge watching Killing Eve, which has been so fun and so interesting. Right up the serial killer alley. So
very interesting.
Yeah.
Tragic but interesting.
Yes. Well, thank you so much, Noel, for coming on. We really appreciate it.
My pleasure.
All right. We'll
Yes,
talk to
thank
you next,
you.
guys.
Bye.
And thanks
Bye,
for tuning
everybody.
in.